Welcome, welcome, welcome. What's going on, everybody? How are we doing? Good to have you tuning in to the Market Minds. Hopefully, everybody can hear me okay. My name is Charles Moon, sitting in for the great Scott Bauer. Got a lot to talk about today. Whew, what's been going on in the markets the last few days? Uh, I think I should add, we're talking about Amazon and Apple. I think we may have to add Google to this conversation. Um, some really weird price movement. We're going to talk about a little bit of AI and the story of AI and the growth story of AI relative to stocks. Um, some pretty fun topics today. Got my Prosper swag on here. Glad to have everybody. Look at this. All right, all right. So let's get to it right away, okay? Amazon and Apple. Why am I talking about these two wonderful and powerful stocks? Well, they've been a bit of a laggard here, quite frankly, over the last few months. Just huge swings, really choppy ranges. Meta was very similar. Google had a bit of a strong breakdown to the 200-day moving average and is on the road to recovery. But that's the thing. Amazon, Apple right now are are doing this. And this is something I hope everybody is aware of, but if not, I'm going to point it out directly to you. We are looking at a fairly substantial breakout that's taking place in Apple. Now, this is in a really, really aggressive suppression range, essentially where Apple's been getting knocked back going on for months on months on months. And sure enough, the second that they broke and hit that higher high, we've had this extended range breakout. Yesterday was really prominent. They had gapped open lower and just had a huge explosive move while the market was struggling all day long. The Qs were working the other direction, and this one is working higher. And yet again today, here we go. Apple, another day, another new high, another new all-time high. Really explosive movement. Now, yesterday, the fuel that's been adding to this range extension was news out of Saudi Arabia. They're going to be able to, quote unquote, sell more. And that's really important, right? A country that's just, you're swimming in money in that country, right? And so just to be able to open up more stores, get more of their product available in the hands of the people of Saudi Arabia, that's a big boost from a financial standpoint, from revenue standpoint. That has been a terrible booster. Now, Apple has also worked and announced news that they're in a collaborative measure with Amazon for AI, and that's really important. Now, if we look at Amazon, Amazon already had this essential double top breakout, and they had that move, and I'm like, oh, it's about to explode. And then there's that big, strong pullback. But from that pullback, folks, Amazon and Apple are in this explosive breakout. Amazon essentially has moved from 195 up to 230. Now, the reason why I'm pointing this out is that throughout this calendar year, even when we're in a really bullish state, Apple and Amazon have both had fairly suppressive ranges, meaning they weren't nearly as strong or in demand, even though they moved up very nicely as we have previously seen. When Tesla broke out recently, I was telling my trading room, look, guys and gals, Tesla's back. And what I meant by Tesla's back is that Tesla has traded very differently along with Apple and Amazon since their splits. Well, before, Tesla would have ungodly strength and price movement and range extension. Guess what, folks? Tesla's back. And that's what I wanted to say about Amazon and Apple. Both stocks are exhibiting very different behavior here over the last month. And maybe this is just attributed to being the end of the year. And once 2025 rolls around, things can look very different. But if you just look at the trading behavior, the range movement, the extended price and directional ascension on these names, they're back. This is really important to understand. And this effectively could be a very big boost for the markets, or at the very least, allowing the markets to hold up while we're having and dealing with other sectors, which is going to be the next topic, that's dragging the markets down. And that's something that's been the polar opposite from the start of 2024. Now, let me just also quickly pull up Google. I didn't have time to change this doc, but you could see Google with a very substantial gap open from the close of yesterday. Now, if you're wondering, they announced yesterday that they made this new chip, this quantum computing chip, aptly named Willow. The problem is there isn't a computer in this world that can power it. Listen, I read a word today I'd never heard before. It's like a gazilliton or something like that, which is like a one with like, I don't know how many zeros. Don't quote me. Maybe like 15, 20 zeros after it. It's a ridiculous number, but apparently this can compute like solutions faster, that much faster than a normal computer. I I I don't know. It's funny that they created this component but don't have a computer to be able to power it. And that's the thing. That's the actual problem with quantum computing. Quantum computing, by the way, really strong today. Rigetti, RGTI, Romeo Golf Tango India, really cheap stock. This stock's been well known for a while now. But it's really been very, very active. There's another one, QMCO. Some people might be more familiar with IONQ, India, Oscar, November, Quebec. These are quantum computing companies. And you know what's supposed to go kind of hand in hand with that are the nuclear names, because that technology needs the power that can't be generated from electricity, but can be generated from nuclear. They should be kind of going hand in hand. Well, nuclear is falling, off the bed and rolling over and falling even deeper. And these quantum computing names are going up because of this Google news. So we'll see. But, you could see just here to the chart on the right, the overnight trading that took place. Wall Street clearly likes the news. And for now, it looks like Google's going to be testing their all-time highs at 190, 135 sooner than later. So we may see. It's it's 100 zeros. Thank you. Whatever. I've never heard of this word. I literally thought they were just making it up, but I guess it's a real word. All right, so let me pull the chart down really quick and go to slide number 2. Now, the AI trade, is it losing momentum? Let me know in the chat, folks. Let me know in the chat. I want you to tell me, is the AI trade losing momentum? What are your thoughts and your feelings here, okay? This is going to be super, super, super duper important. I'm just taking a quick sip. Also, as we start moving on, let me get out of the way early. If you like this content, if you're here, you generally like this content, right? Under the video, there's this little thumbs up button. I kindly request that you click on that button. Listen, it doesn't cost you anything. It doesn't hurt to click it, but it does help us. If you happen to not subscribe to our YouTube channel, next to that thumbs up button, there is a button that says subscribe. Listen, it's free. Free 99. Why not? You're getting great engagement. You're getting great information. And more importantly, you're getting free swag, right? How many people have won free swag in the last 2 weeks? Especially when I've been at the helm. My last episode, I think I went a little overboard. So a lot of people don't feel that the AI trade is losing momentum. This is where I actually will disagree. Now, the assumption is because everything related to AI is related to this name, NVIDIA. And I agree. NVIDIA, well, they just made new all-time highs. They're generally in the upper portion of their year's range. I'll shrink this down. You could just totally see where they are from a calendar year ago. Yeah, totally strong. But yet they're under their 50-day simple moving average. How about one of the biggest beneficiaries of AI, SMCI? How have they done? Well, again, if I condense their chart a bit, That's a steep drop. That's a steep drop. Here's another company that had just an outstanding and unbelievable start to the calendar year. Well, this is now Dell. Dell, of course, went screaming from 80 to 178, and now they're trading at 117. By the way, they're below their 200-day moving average. So there's a lot to AI. The one thing that I'm going to tell you right now is that if you look at the effective corporations that also could benefit from AI, well, AMD obviously is the number one competitor for NVIDIA. However, AMD is now approaching their 52-week lows in a strong breakout to the downside after losing that 132 level. And I could go on. Quite honestly, the names that are holding up best is NVIDIA, is TSM, which is falling apart today, and of course AVGO, which is set to report later on this week on Thursday. But if we look at a lot of the other component makers, ones that were screaming up, we look at the semiconductor sector. The semiconductor sector has struggled greatly. SMH, of course, is a very important ETF for the semis. They're testing their 200-day moving average. If you look at Sierra, Oscar, X-Ray, another semiconductor ETF, they're actually below their 200-day moving average. So, folks, if the sector is healthy, then why are these ETFs approaching their 200-day moving average and not their all-time highs? Remember, sometimes things can go up a bit too fast, and then when the realization of valuation starts to actually matter, they go into these corrective measures. Now, does this mean that the semi story is done and all that? No, not at all. Not at all. I do believe they're going to bounce back in 2025. But I was on this Market Minds live cast just last week, and one of the things I said is, what is going to be the next explosive sector to watch? Well, I got to be honest with you. Guess what? They're tied to AI, but they're the ones that haven't been, quote unquote, the beneficiaries as of yet. And I believe that's going to be coming into the future, and that's going to be cloud. Cloud is going to have to be able to power and be a source of power for the development and growth of AI. And of course, the components are an important aspect to that as well. And then, of course, to protect all that information, you're going to need the cybersecurity companies. So I have, at least for me, I have some conviction that cloud names and cloud stocks, along with cybersecurity stocks, are going to be the hot sector once again. If you've been tracking these names since, I don't know, 2015 and 16, you've seen the growth, and you've also seen how explosive they can be after they've turned around. Case in point, COVID, but you could look past COVID or beyond COVID, look at 2017 and look for the rally back up to 2020. Names like MongoDB, Datadog, Snowflake, these are names that come to mind. Now is a big one. Names like RNG, Ring Central. I believe Ring Central, let me pull them up on a weekly chart, but they're $42, pretty cheap, right? So if we look at them from a historical standpoint, going back 5 years, it used to be a $400 stock. So once they start coming out of the slumber and they get into that growth aspect, they could, I'm not saying they go up to $400, but how would you like a stock that goes from $41 to $80 or $90? I'm sure a lot of you would like that. And that's where I see a lot of growth, right, in the AI sector kind of coming into fruition next year. Semis are going to rebound, but their valuations are really, really frothy. So we have to say how much more meat is on the bone, how much more upside is going to be available. I'm sure they're going to be able to break those highs and extend, but are they going to make the leaps and bounds move in 2025 they did in 2024? Very possible, but more likely not than other stocks such as Snowflake, Datadog, MongoDB that have great upside and certainly a lot of room to play catch up on, right? So that's going to be really, really important. Now, folks, how would you like to know when the stock is going to test the 50-day simple moving average? Meaning, when we have the ability, all right, the ability of recognizing when we could see a substantial retracement in a stock take place. How many of you would like to know that? I'm sure not everybody is short sellers in this chat, but I'm sure a lot of you do short stocks. So how would you like to know? Do me a favor, type in I want to know. Beautiful, beautiful. Now, before I get to that as well, ladies and gentlemen, I'm going to help my man Michael out. We're going to do it just a little bit early today. Folks, if you want to join in on our swag giveaway, do me a favor. Type in the word short, short, S-H-O-R-T. That is the word of the day. If you want your name on that wheel, ladies and gentlemen, I need you to spam that chat with the word short. Now, do me a favor, just type it once. If you're gonna type it 25 times, we're just gonna take your name off the list because we need to make sure we get everybody on there. Okay. So do me a favor, if you want to be involved in our giveaway today, type the word short. Michael's gonna get your name and get it on the list. Okay. See, Michael, I got you. All right, so now getting back to this, okay. So there has been this interesting base, okay, and this is going to be based on the daily chart. Now, you're going to be looking for several things. First and foremost, you're going to want to have these indicators on your chart. A 10 EMA, I'll write it out for you folks. And again, if you like this information and you find it helpful, do me a favor, click that thumbs up button. Boy, I sound like a Twitch streamer. You see the second arrow? This second arrow is going to be the 20 SMA. And again, have this on your daily chart, okay, please? And this orange line right here, that is going to be the 50 SMA. Now, there's going to be a step-by-step. Now, if you want to record this on your own, I'm going to teach this, obviously, but I want to try and explain my thought process behind this because it's going to make a lot of sense, okay? It's not guaranteed. I don't want to say that you will 100% see the stock go all the way down to the 50 SMA, but the level of consistency and history, it makes a lot of sense. Now, this is when stocks are in very strong uptrends. We always say, when do we want to short, right? Some people are very contrarian to that idea. Generally speaking, you know, if you follow me on Twitter, you know that my Twitter handle is Disciple of Trend. Well, there's also the reversal of trend that starts taking place. And there are signs of weakness that will give you more confidence in attacking these stocks that are at these extended highs and trying to ride them back down. It doesn't necessarily mean you're trying to ride them into the dirt, but we're going to understand that there's going to be what's known as this profit pocket that presents itself. And of course, that's what you're attacking. You're attacking that easier route to profitability. So these three indicators are what's mattering, what's going to matter in this scenario, because it's going to be surrounding the behavior and interaction of these indicators that's going to give us this guidance that we're going to see perhaps this retracement, okay? So number one, that 10 EMA. Well, it's pretty simple. When stocks start breaking down below these moving averages. So for example, let's pull up Apple. I guess this could be an example. Once stocks start breaking down below these moving averages, it is going to give you a very clear-cut signal that things are not the same, right? If things are the same, well, the stock is going to constantly go up, is going to keep getting bid up, and it's just going to keep on rising and trending higher. So, for example, in Apple, if you take a look here, As I draw, you're going to notice that this stock has remained for several months above the faster moving averages. The faster moving averages is the 10 EMA and the 20 SMA. So the two signs that you're looking for is number one, a stock to get under the 10 EMA and close under the 10 EMA. That generally means it's going to work very quickly down to the 20 SMA. So effectively, if that doesn't make sense, if this is the 10 EMA and this is the 20 SMA, if the stock slides under this yellow line and closes underneath it, it's more likely to come back and test this level. Now, can it bounce? Absolutely. And if it does bounce, it's still giving you a very visual validation and verification that it's still strong and in that bullish short-term bursting uptrend, okay? This has got to make sense. If it closes then under the 20 SMA, well, like we say, when it loses one level, it goes to the next. When it loses that level, it goes to the next. And usually when stocks are extremely frothy, their 10 EMA and 20 SMA are generally within the same range. You could see that this is the overall range that this stock has traded within. So it's really tight. That's where those moving averages. Once it loses it, that's where the open spacing starts to come in. And that's what you're attacking. You're attacking that profit pocket zone between the 20 SMA and the 50. As you can see, Apple came back up to the 20 and rejected. And look at how far they ended up dropping. Now, this is starting to take place in names like APP. So this is going to give you a bit of a visual representation in real time on how things are starting to look. Now, they haven't done it just yet, but notice that yesterday, if you could see, right here is the 10 EMA. Well, they got below that level. Today, near the highs, that's where we had rejected. Right now, we're on that 20 SMA. Folks, follow my arrow down. Do you see that? This is what I call a profit pocket. Now, you may not believe that APP can collapse from $333 down to $230, but why not? If a stock goes up fast, it could come down fast. So, if I erase this arrow, what technical indicator inside this box do you see to provide a pivot zone or a reference for sellers to take profits or buyers to jump in? Anybody? Do we see that spacing now? Does it start to make sense? This becomes what could be a potential home run style of trade. Now, the key sign here is for the stock to get under the 20 SMA and close. Once they close, that point has to become resistance, right? It has to become resistance. It starts to trap those short-term buyers. They're like, oh, this stock is down, I gotta buy it, right? And when they get trapped, guess what? We start squeezing down. Now, APP, for someone's asking, it's not there yet. Have you folks heard of a stock named MSTR, MicroStrategies? Who knows about MSTR in here? MSTR, folks, one of the most bullish stocks that we have seen, right? Explosive. I'm talking about in the last month, they doubled up in price. Well, guess what? Take a look. This is your 10 EMA, okay? The yellow line is the 20 SMA. And look, found support here. Okay. I'm going to highlight it with pink. It found support right here at the 20 SMA. Well, today, look, it closed underneath the 20 SMA yesterday. And look at where the high of MSTR and where MSTR got dropped from. And if you don't believe me that they got dropped, do me a favor, look at the chart on the right here. Anything in this black box zone or the black zone is today's trading range. Notice that MSTR got hit and immediately dumped. That coincided with the 20 SMA. Now, it's going to be difficult for a stock like APP and MSTR to work that effective profit pocket, but it's not impossible. We have seen it with some of the most bullish stocks this year. Now, let's talk about SMCI. Remember this stock, folks? Remember how bullish it was before their split, right? What was it, $1,200 or so? Well, take a look. I'm going to show you. There's your collapse of the 10. There's your collapse and trap underneath the 20. And notice that they rejected from the 20 here straight down to the 50. And as these moving averages, especially the faster moving averages, start to cross down below the slower moving averages, more and more and more signs of weakness start to get showcased. This is extremely important. It happens. You see it all the time in some of the most bullish names. Lulu at one point in time, one of the more bullish stocks out there. Guess what? 10 EMA, 20 SMA trap. Look at how they went straight to the 50. Now, this pattern is not designed for stocks that are trading at or near the lows. This is a design on stocks that have been in significant uptrends, right? That have had sustained rallies for months on months on months. These are the small signs, the small validations that the up move, the up demand, the buying strength has exhausted and that sellers are starting to take control. Now, does that make sense, everybody? Is that comprehensive? It has to. It doesn't have to, but quite honestly, test this out on any stock that you have seen that has been in this significant rally. Remember Celsius? Remember how strong Celsius was? If you don't believe me, again, they had doubled up in price during that time frame. Went from $45 to $99. Lost their 10 EMA, lost their 20 SMA. Down she goes to the 50. Did it again here, lost the 10, lost the 20, down to the 50. AMAT, anybody remember how bullish AMAT? I remember because some of my biggest trades this year were AMAT. You see it happen. In some instances, it may be smaller. Look, there's a small retracement back to the 50. There was a small retracement back to the 50. There was a small retracement back to the 50. But how consistent has it happened? Now, just because it gets trapped doesn't automatically mean it's going to go down. I can't guarantee it's not a 100% move, but listen, 8 out of 10 times, is that consistent enough for you? And if it is, then this is something you want to be very, very attentive of. I assure you, you'll be surprised at how good this trading formation behavior and follow through has been consistent over the last few years. It's something that I've tracked and looked into. It's actually something that I've been dying to try and program into the AI system that I use. Unfortunately, it keeps false flagging a lot of the alerts, but if you can recognize this formation, folks, you'll be surprised at how easy the route to profitability will be. Sometimes it could be 100 points like APP. Sometimes it's 6. Listen, I can't measure how big the move is always going to be because every chart is different. But this is something you need to have. And this is why you need to tune in to Market Minds, folks, because you get to learn something new. You get informed. Ladies and gentlemen, I don't know how to do all that. Let me just do this really quick. That now leads me to... What the? Where'd it go? Hold on. Let me do this again. All that hype for nothing. For nothing. Let me do it again. And that leads me to, ladies and gentlemen, the wheel. Looks a little light on names, so we must be a little bit low on viewers. But folks, if you are ready to go, we're going to hit this button in 3, 2, 1. Good luck, everybody. We'll see who the wheel chooses today. It looks like... Oh, it's my man, Mark C. Mark C out of Vegas. What's up, baby? We finally got you some here. Mark, my man, do me a favor. Email, what is it? Is it prosperswag@prospertrading.com. We'll get your info, and then we'll send you out something here. Congrats, Mark. So, with that, I just want to say, everybody, thank you. Thank you for your time. As always, and in tuning in. I really do love... doing this stuff. I guess it's my cup of tea. But more importantly, I love when I can help people learn new things about the market, especially if it's going to benefit them. If you happen to like us, like this broadcast, again, do me a favor, subscribe. Click on that like button, which is that thumbs up button. Do me a favor, follow us on our socials. You can follow us on Twitter or x.com, Prosper Trading Academy, myself, Disciple of Trend, the great Scott Bauer. You can find him as well. We'll make sure we have all the socials and information down below. And with that, ladies and gentlemen, I am out of here. Let's see if we can finish the day off in a strong rally. Make sure you remember CPI data tomorrow before the open. We'll see if that sets the tone for the rest of the week. Peace and love, all.